Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Skyworks Solutions Inc. quarterly report. Skyworks Solutions Inc. offers a diverse range of products and services across various industries. At the core of its business are analog and mixed-signal semiconductor solutions that cater to different markets. These include amplifiers, antenna tuners, attenuators, automotive components, wireless SoC, DC/DC converters, demodulators, detectors, digital power isolators, diodes, directional couplers, diversity receive modules, filters, front-end modules, hybrids, and light-emitting diode drivers. The company's product portfolio also encompasses low-noise amplifiers, mixers, modulators, optocouplers/optoisolators, phase-locked loops, phase shifters, power dividers/combiners, power over Ethernet, power isolators, Pro-SLIC family of subscriber line interface circuits, receivers, system-in-package, switches, synthesizers, timing devices, voltage-controlled oscillators/synthesizers, and voltage regulators. These products are used in various applications such as aerospace, automotive, broadband, cellular infrastructure, connected home, defense, entertainment, and gaming, industrial, medical, smartphone, tablet, and wearables. In terms of sales channels, Skyworks Solutions, Inc. utilizes a direct sales force, electronic component distributors, and independent sales representatives to reach its customers. This multi-channel approach enables the company to effectively cater to different customer segments and industries, further solidifying its position as a leading provider of analog and mixed-signal semiconductor solutions. Unfortunately, I do not have access to the text you provided. However, I can still provide a general essay on what may cause a stock price to remain stagnant over a period of time. The stability of a company's stock price is often influenced by various market and economic factors. One possible reason for a lack of significant change in Skyworks Solutions, Inc.'s stock price over the past year could be the company's consistent financial performance. If the company has been able to maintain steady revenue growth, expand its product offerings, and increase its market share, investors may view it as a stable investment option. Another possible reason for the stagnant stock price is the overall market conditions. If the broader market is experiencing a period of low volatility, or if there are no significant economic changes that would impact the company's industry, the stock price may not experience any significant fluctuations. Additionally, the lack of major mergers and acquisitions in the company's industry could also contribute to the stability of its stock price. Furthermore, the company's management team and their strategic decisions can also play a role in maintaining a stable stock price. If the management is able to effectively navigate the company through challenging market conditions and make informed decisions about investments and resource allocation, it may help to maintain investor confidence and prevent significant changes in the stock price. In conclusion, there could be several reasons why Skyworks Solutions, Inc.'s stock price has remained relatively stable over the past year. It is likely a combination of factors such as consistent financial performance, market conditions, management decisions, and industry trends that have contributed to this stability. Skyworks Solutions, Inc. market capitalization of $9 billion is materially smaller than most of its industry peers of roughly $45 billion. Skyworks Solutions, Inc. trades at a lower price-to-earnings ratio of 24 times and a lower price-to-book ratio of 1.62 times relative within the industry. This makes the stock valued slightly lower than its peers in the industry. This likely suggests that investors are less interested about the company, or it could be that the stock have not caught up to the industry valuation and should further be investigated. The balance sheet appears very conservative, with liabilities representing only 27% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The company have a dividend yield of 4.57%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of the extracted summaries. On one hand, there are several factors contributing to revenue growth. For instance, an increase in demand for Wi-Fi products has led to revenue growth. Additionally, Taiwan and Europe, Middle East and Africa have experienced significant increases in revenue, with Taiwan's revenue rising by 10.3% in Europe, Middle East and Africa's revenue increasing by 46.5%. Furthermore, direct customers' revenue has also seen a modest increase of 1.8%. On the other hand, there are several factors contributing to revenue decline. A significant decrease in market share at a major customer has led to a decline in revenue. The United States, China, and South Korea have all experienced decreases in revenue, with the United States experiencing a decline of $41 million, 4.8%, China's revenue decreasing by 10.9%, and South Korea's revenue declining by 9.1%. Moreover, distributors' revenue has also seen a decrease of 3.7% over the same period. The net income of a company underwent significant changes over the period under review. Initially, it stood at $162 million, but decreased to $79.2 million, marking a decline of 51%. This substantial drop was not limited to the year-end figures alone, as there was also a notable decrease from September to December, with net income plummeting by $200.30. The profit margins of the company also experienced a considerable change during this period. The initial profit margin stood at 15.1%, but it decreased to 7.6% by the end of the review period. This decline in profit margins is particularly striking, indicating that the company's ability to convert sales into profits was severely impacted. The reasons behind these changes are not explicitly stated in the report, leaving room for speculation and further analysis. However, the stark contrast between the initial and final figures suggests a significant shift in the company's financial performance over time. The company's financial performance has shown a promising trend, with the generation of positive operating cash flow. This indicates that the business is able to cover its operational expenses and generate excess funds from its core activities. According to the provided information, this positive trend is consistent across both periods examined, as stated on page 6. Furthermore, page 25 confirms that the company is indeed generating positive operating cash flow. Management's outlook for the company is stable, with sufficient cash expected to meet short-term and long-term liquidity needs. However, they acknowledge that this cannot be guaranteed and are cautious about making significant acquisitions or investments due to potential additional funding requirements. The company is also closely monitoring proposed legislative changes that may impact its business in future periods. To mitigate risks, management is considering entering into foreign currency forward and options contracts to protect against exchange rate fluctuations. Overall, the tone suggests a cautious approach to managing the company's financial position while maintaining a stable outlook. The company has a history of rewarding its shareholders through various means. One way it has done this is by paying dividends. As per the records, the company has indeed paid dividends to its shareholders. In fact, on February 3, 2026, it declared a dividend of $0.71 per share. In addition to paying dividends, the company has also taken steps to return value to its shareholders through share buybacks. During the 3 months ended January 2, 2026, the company purchased 621,305 shares, demonstrating its commitment to maximizing shareholder value. That concludes the financial summary for Skyworks Solutions Inc. Feel free to comment below, and I will be happy to answer them when possible.